Thank you for joining us once again here at Seaford and Brew for our weekly briefing. I am Jamie Sumner, Chief Analyst, and I want to welcome everyone back from our holiday, our Thanksgiving holiday. Hope everyone had a great Thanksgiving. What we want to do today is review over our several releases that have come out over the past couple of weeks, just to get a feel for the economy as we move into this last month of the year. It's hard to believe December is here, just 5 weeks more until we see Christmas. So our recent economic releases, let's start off looking at the inflation side of the equation here for our economy. And the PPI, the Producer Price Index, came out at plus 0.4% month over month and 2.8% year over year. When we look at that compared to consensus in here, consensus was at 0.1%. So we beat consensus for the inflation side in the manufacturing or producer products. When we look at the core PPI, also up 0.4% for the month over month move and 2.4% for the year over year. So on the producer side, we start to see a little bit of that price inflation come in. Theoretically, we should start to see this work into that consumer side or retail side in the next couple of months, but we'll see if this trend continues. When we look at the CPI, the Consumer Price Index, we saw that up by 0.1% a month over month and 2% year over year. Overall, with the core CPI up 0.2% month over month and that 1.8% year over year. When we compare this to consensus, the consensus was, it just met the consensus at that 0.1% for the CPI. So again, with the inflation kind of still subdued. We start to see it moving a little bit. However, this probably might be enough to push the Fed to increase rates again in December. The market is projecting that way. We're still up over 90% probability of a rate hike in December. So we'll see where those numbers come out as we move throughout this the remaining of the quarter, and we'll see where the Fed is on mid-month in here in December. But again, it looks like the market is pushing to a Fed hike. However, based off of the inflation and the other numbers that have been coming out, there's no real need to push that Fed funds rate higher. When we look at retail sales up 0.2% month over month, up just 0.1% when we exclude autos. The consensus was 0.1, so we beat consensus on retail sales for October. When we look at the inventories, though, and this is a September's numbers here, there's a fairly a large lag. So September numbers, month over month, 0% increase in retail sales, or for inventories. So we didn't have much of a change in the inventories. We saw retailers actually decline by 0.9% for their inventories. So wholesalers and manufacturers increased their inventories, kind of outweighing that, making that overall inventory number 0. The inventory to sales ratio, we continue to head down. It's at 1.36 times currently. As far as September's release, long run is around 1.38. So we're still moving down in that retail sales. This could, however, build into the fourth quarter GDP numbers, with the retail sales needing to, inventories needing to be propped up for the holiday season. So we might see a pretty good impact from the inventories in the fourth quarter GDP. We look at durable goods. Durable good orders off 1.2% month over month. When we take out transportation, we're positive by 0.4%. We saw a big pullback in the non-defense and defense spending on aircraft. Non-defense was actually down by 19%, just about 19%. And then we saw the defense aircraft orders fall by 11.3%. So we saw a big pullback in the aircraft, but that was expected. The actual consensus in here was a positive 0.4. So we look at, but ex transportation, we were a positive 0.4. We also had a pretty significant revision to the September release, where September was revised up to 1.1% from where it was released in the advanced release at 0.7%. So we saw a positive impact there on that durable goods. That should filter into the second estimate for third quarter GDP. So that's what we have for you this week. We hope to see you back here next week when we review over the second release of the GDP and maybe look at some housing numbers as they start to filter out. Thank you so much for joining us. Have a great week.